Hello everyone, good evening. I hope your weekend is going well. I want to drop this video today and I'll be analyzing Bitcoin and tell you guys why I see my directional bias and everything, and I'll appreciate if you guys share your own thoughts, what you think and everything. Now I would like to also say that every analysis I'm doing concerning currency pairs are all done in line with data stuff collected from news, seeing what is happening. This is currency pairs, but this is crypto, right? But you should also know that economic news do affect it, right? So yeah, so as just for you to understand the transfer of money from one place to another, like as an investor you should actually think that way. So it's like saying when there's an inflation going on, that is when you see gold start going up, including Bitcoin most times. And when it happens to be that gold is going bearish and the dollar index is gaining strength, people are moving into the dollar index due to interest, right? So they invest into dollars so that they can gain interest from the interest rate. So that's by the way. So let's move over to Bitcoin and I'll give you a very strong breakdown analysis on Bitcoin. So we'll be moving from Binance and we'll be going into KuCoin so that I will have a flash chart. As usual, every analysis starts from the higher time frame. I have already talked about Bitcoin the beginning of this year, or probably the ending around December 2025 last year. I still talked about it this year, right? So I made mention that my major area of interest is this bearish candle, and that is a bullish order block, or most of you could call it like a demand zone, right? And around 2022 I predicted the bullish move of Bitcoin from this point, and I was saying we'll be targeting this high to have a new all-time high. For the purpose that we were having a bullish structure, we're having series of higher highs and higher lows. So we have a breakout structure right here. Price returned back to the fair value gap that was responsible for that structural break, right? Then that was a confluence for me to say, all right, we're gonna have a new higher high. We will continue bullish trend, and we finally did that, giving us a breakout structure right here. So now this year, most people, that is why most people do, they don't analyze the market from higher time frame. They think that once the market is going higher, they're expecting it to continue going higher and higher and higher and higher and higher, without actually being patient and understand how the market works. That it goes with series of structures, higher high and higher low. It buys into a premium pricing where it gets expensive, it needs to sell to a discount price where it needs to get cheaper. So as someone who's investing in your funds, investing your money, your capital, everything, you're buying at a discount price, a cheaper price, and you would like to sell off your asset at a higher price so that you can get your profit, right? And so forth. So if you're into economics or commerce and you know about your supply and demand and everything, all the rules involved in it, then you clearly understand what I'm trying to explain. So we finally have bullishness and we have that breakout structure. Now this particular year called 2025, you can actually see that it traded higher and it did a rejection. That is a rejection week, closing below 2024 high, below 2024 candle. So we did a sweep of liquidity from that high and we closed below. So this year tells me that, all right, since last year closed below previous candles, then that means I'll look for confirmation on the lower time frame to look for a bearish structure for this year to go bearish. But we actually need to confirm that, because first and first is that, number one, we're having this pricing at a premium pricing, so it's kind of risky for you buying something at an expensive price. It's at a premium, right? And seeing this candlestick is kind of like a rejection candle, a reversal candle. For those that have thought, I made mention of 5 major candles. Even on my Udemy course I mentioned 5 major candle, which is the bullish candle, the bearish candle, the doji candle, which is the consolidating candle, and we have the bullish and bearish reversal candles, right? So that is a lecture on its own. So yeah, so now that we have this higher low, we now have this as a higher high. So what comes in mind is that we are using our Fibonacci to mark this low up to this high, and what we are looking for is our discount price should return to the discount. Now if you look right here, you can actually see that 70% is the area that we are looking has a discount, 70%, 79%. Now which line or which area is that 70%? It is around that bullish order block that we levered, right? It is above the bullish order block. So that actually makes sense that we were having eyes for there. We have eyes right there for Bitcoin to be drawn, to be traded into. So also you can still use the liquidity D range, where you have this high and this low, that is previous year's high and low, and with that you can now do your analysis every month to predict where the market wants to go to using the liquidity D range. So now another thing that I did notice on this chart is this right here. I'll notice that we have a D range, a major D range that we are dealing with, which is this high and this low. Now this is so because if you look very closely, you can actually see that we are inside this candle's high and this candle's low, right? So liquidity has already been taken from that candle's high. So it's very, very certain and understandable that the market will not come back to this all-time high this year. It's gonna close bearish this year. So since we have taken this basal liquidity on this high, the liquidity rest on this high, pull of liquidity rest on this high, we can now say, all right, so liquidity has been taken here. That means this liquidity needs to be delivered into the opposite side of the liquidity, which is this wick on this low, known as the sell stop. So liquidity taken, deliver that liquidity down to the opposite side of the liquidity, which is the discount area, which is this low on this candle. So now that we have seen this from our higher time frame, we can just quickly keep going down to our lower time frame, down to the daily time frame. This is where our analysis we stopped at. So the 4 hour, 3 hour, down to the 15 minutes will be area for a confirmation entry, for confirmation and for entries. So running down to 6 months time frame. So I want to take all of this out. Sorry, I'm having cough. So this is now the 6 months time frame. You can actually see what happened the first 2 quarters, which is this was previous year quarter, right? So the first 2 quarters that we have for this year is this high and this low. All right, and you can actually see that we have this current, this 6 months candle close to the previous 6 months low, right? And this is our time frame. This is the massive order block that we saw from the 12 hour time frame. Now for the 12 months time frame, now if you look inside that structure, right, we are actually seeing that there is a fair value gap right here. So this actually makes sense that the market wants to be drawn to this opposite side of liquidity and trade into the fair value gap that is below that liquidity. So there will be a buy reaction when price gets to that area. Now another reason why this would be a valid point of interest is that this is the origin of what broke this high. All right, and all of this is areas of liquidity. All of these wicks that we have right here is an area of liquidity. It is a balanced area. It is an area that is already balanced, and this is the only point at the discounts that we're having as an inefficiency that price that caused the bullishness of price to be drawn to this high and break a structure. Now there is also a kind of structure called a one-sided market. So this is a structure, right? We are having this high and this low. For you to mark something as a clean structure, there needs to be like a gap. It needs to have like a gap at the middle right here, and it's looking like a sharp structure, like a V structure, right? So this is what you can see, and you can tell that this is a valid structure. Now there's what we call a one-sided market. A one-sided market is when the market wants to quickly be drawn to an area of liquidity. So let's just say that we are targeting this high to have a new high. The market can possibly trade one-sided, where it's just doing this. It trades high, it quickly return back to a fair value gap, and boom, it trades high, come back to a fair value gap, and trades high. This is a one-sided market, when the market wants to quickly rally and be drawn to an area of liquidity. So on your higher time frame, you'll be having all of those wicks. All right, so this is where the market just possibly trade higher, form a one bearish candle, trade into a fair value gap, and boom, it rapidly continue to push the market higher, so that you can quickly get to the liquidity that you want to go to. All right, so that is it. Just like here, you can actually see this is a clean structure, high, low, trades into a fair value gap, and then we saw this massive rally series of bullish candles trading higher. Running down to the 3 months time frame, and this is it right here. This is the quick rally of the one-sided market. So on the 3 months time frame, this is the older block. This is the origin of where the impulse occur to break this high. So this is what broke this high, and not this. All right, this is not what gave you a break of structure, but this fair value gap below. So this is now identified as a sell stop. This is a smart money trap. All right, we go down to the monthly time frame. So this is the monthly time frame, where market starts to look more clearer to you. So you can actually see that immediately we broke that structure, we trade lower, we traded into a fair value gap, and then we rapidly trade higher again. We came back down into another fair value gap, we respected the fair value gap, and then we trade higher to sweep this high. Now I also need you to pay attention to what was going on at this high. You can actually see when price was drawn to the high, it started to range on the high. So this tells you that market is purging the high. All right, it is purging the high, taking out series of liquidity from the high. So this is a manipulation. All right, so when you see something like this occurring at a high, it's trying to give you a signal that it's likely going to be a Wyckoff distribution. All right, later on I'll talk about Wyckoff distribution accumulation phase and the area it is mostly likely to form. All right, so seeing how market was playing around and raging on that high, it tells you that there is a purge going on. Now look very closely. Do you see a massive rally candle, like an impulse candle and a ghost candle on this structure, or an area of fair value gap? A very clean value fair value gap. You'll actually see that all area is filled up, is all balanced. And the only area that we have is this as a fair value gap. But this is gonna be a risky area for the reason that it is at a premium and not at a discount. So it is a low probability setup. So you can now see how price rapidly trades down into that, destroy it, and then came back to that and use it as an area of resistance to sell off. That is an inversion fair value gap. And then be drawn to this low. All of this has been balanced, right? There is also no area of inefficiency. So this tells you that the market has shifted from a bullish to a bearish market and needs to be drawn to where? The opposite of the liquidity, when we have this range low right here. So I'm expecting Bitcoin to return to that $8,501. All right. Now look very close at the monthly time frame. This fair value gap was violated, right? Price returned to the inefficiency that was here to sell off, and then it now sold off and broke this low. This is previous year's low, right? After that break, what was responsible to break that low? We have this fair value gap. Price returned to it and then sold off. Now I remember I posted on Facebook and my WhatsApp channel about the short I took on Bitcoin, and it is on this high. Or after I noticed how the market opened right here, we traded higher and traded into that fair value gap. So I took a short from there. I shared it on my YouTube channel, I shared it on the WhatsApp channel, and also my Facebook page. This is a perfect position trade for me, taking a short right here and taking profit at this low. So now we have taken this low and we are returning back, and we traded into this fair value gap. It touched the 50% of that fair value gap, and then we traded lower again. So now what is my anticipation for Bitcoin when market opens? Now I can notice that I have an area of inefficiency resting right here. So when market open from next week and also from August, I'm expecting price to return back into that fair value gap. When it gets into there, I'm watching the price to confirm on the 4-hour time frame and the 1-hour time frame when the market shifts into a bearish structure, and then I'll be executing my trades to short Bitcoin down to the 12-month old block, right, which is at the $45,000, and then our daily range low, which is at $38,000. This is a position trade for me. For most of you that have known me, I do more of swing trading and position trading. All right, so each and every week, once the week starts, Tuesday, Wednesday, I look for trade. I could leave at the end of the week and wait for the next week to open, and then I execute the trade. All right, having a strong directional buy. So now this is it at weekly time frame: high, low, high, low, high, violation of bullish trend to a bearish trend. So Bitcoin has shifted bearish and needs to pull back down to that 12-month old block and still trade into for this liquidity that we're having on that's $9,000 or $38,000. That is where we are having our deal range. So we're dealing with this high. We're already taking liquidity from this high. We need to come back to the deal range low, which is resting on this low at the year 2024. So this all-time high is meant to remain like that this year and closing bearish for Bitcoin. Okay, so I do know also that most of us are looking right here for a short, but I don't think it's going to return to that place. The reason why I'm saying it's not going to return to that place is because I'm looking at the monthly time frame, and I've already seen that area of inefficiency has been filled up, and the same one-sided market that happened right here is the same thing that is going to happen when it starts to sell. All right, so I'm anticipating a return into this inefficiency, and then we're looking for a short for the month of August, and we trade down to $45,000 and down to our daily range low at that $8,000, that $8,500. So I am also worried if it is likely going to return to this area, because of when I'm looking at that low, I'm seeing area of support. That is a liquidity resting there. So once this gets violated, I'm looking forward to $15,000 on Bitcoin. Yeah, so as the months continue to go, and also when 2027 opens, then I'll see what's gonna happen. We have war going on with Iran and the US, the Russia, the everything war. All of this is affecting the market. So this is not a financial advice, like you guys always know. These are ideas, these are the analysis that I share with you guys so that we can talk about it. This is for educational purpose. All right, my personal view, my personal point of view that I always share on my social platforms. So this is all I have for Bitcoin. If you like to share your thoughts, your idea, I'll be watching the comment section, and yeah, I will reply you. So take care, guys. Expecting a new profitable week for us ahead, and take care and be safe.